Good morning everyone and welcome to another R Crypto video. Today's markets have gone down again. Yesterday's global crypto market cap was at 1.3 trillion after making steady recoveries from the weekend. However, the crypto market cap has gone down to 1.26 trillion, which translates to a almost 4% drop compared to yesterday. Looking at the price of Bitcoin and Ethereum, we see that Bitcoin has gone below the $30,000 psychological level and Ethereum has gone down below the $2,000 psychological level. Both have gone down by an excess of 3.5% and the rest of the market has followed suit. I mean, Cardano is down, Solana's down, Dogecoin is down, most of the market is down. We see a couple of coins that are in the positive, but that's just because of token specific factors. However, the market is moving in a way that indicates that we are facing negative sentiments in the market. Also, dominance is at 44.3%, which indicates that people are still very fearful. And this is mainly because dominance before was around 37-38%, and now it's gone up to 44.3%, meaning that people have removed money from altcoins such as Ethereum and Solana and Cardano and so on and so forth. And those who decided to stay in crypto, they chose to invest in Bitcoin, and that's why its dominance, or the percentage share of Bitcoin of the total crypto market cap, has gone up. We also see that the Ethereum gas fees are very low. A couple of months ago when we were in that mini bull market, the gas fees were at around 125, 130, and now it's only at around 10% of that. And each transaction now costs only $1.5, which isn't much compared to what it was before. And the transaction times are quite quick at 45 seconds. Looking at the Bitcoin chart, yesterday it had broken above the $30,000 level and people were hopeful that it would go up to 31,500 and then up again to 35,000. And I saw a lot of people tweeting, specifically people in the crypto industry, saying that the bear market is over. And this is quite misleading because there was no indication that this bear market is over, and there was no real indication that just because the price of Bitcoin broke 30,000, it would head up to 31,500 and then up to 35,000. Because if you look here, if I zoom out, it had broken the $30,000 level once, twice, three times, four times. This was the fifth time. So I don't understand what the hopium, as they say, was. We're still in a bear market. And as I said yesterday, there was more of a chance of the price of Bitcoin going down below the $30,000 level than up towards the $31,500 level. And as I said, and as I predicted, the prices dropped when the bears got into the market, and then the bulls stepped in and prevented the price from falling even further. So the market is trading laterally. It is quite boring at the moment, and I think it will continue trading like this for the next few days or even the next few weeks before something major happens, which causes either the price to go down or break resistance levels and hopefully rally. French luxury brand Balenciaga is to accept Bitcoin and Ethereum as payments. So starting from next month, the French luxury fashion label Balenciaga will begin accepting Bitcoin and Ethereum as payments online and at select brick and mortar locations. And this move makes Balenciaga the latest legacy fashion brand to embrace cryptocurrencies as a payment method. Obviously, Balenciaga wasn't the first legacy fashion brand or old school fashion brand to accept cryptocurrencies as payments, because earlier this month, Gucci announced that it would begin permitting crypto payments online and at 5 in-store locations. And Gucci accepts Bitcoin, Bitcoin Cash, Ethereum, Litecoin, even Dogecoin and Shiba Inu. So Dogecoin and Shiba Inu, which were previously seen as meme coins, now have some utility as payments. And it's great to see because these are projects which we thought were going to die because they have no utility, and now some utility is being given to it. In contrast, Balenciaga will initially permit payment only in Bitcoin and Ethereum, obviously because they're the two largest cryptocurrencies. However, they plan to extend the program to other coins in due time. Obviously, this is sort of like a pilot program, and if successful, they'll expand to more and more cryptocurrencies. And luxury fashion brands were one of the first type of companies to adopt cryptocurrencies, the metaverse, and Web3. They're at the forefront of innovation. Last year has seen numerous legacy brands including Balenciaga, Gucci, Nike, Dolce & Gabbana, and Burberry launch NFT collections and metaverse pop-ups. And as traditional as these brands are in some respects, they're all seemingly aligned on digital fashion as a business opportunity. These companies are all traditional, but when they have to innovate, they go quickly and they innovate. They want to be ahead of the curve and they want to be the first or early adopters in order to bask in that success. So according to several industry experts, the digital fashion industry could eventually approach or even match the $2 trillion value of physical fashion market. So if the digital fashion industry goes up to $2 trillion, that is at least half a trillion in value that could be traded as cryptocurrencies, because as more and more of these fashion companies accept cryptocurrency as payments, more and more transactions will take place with crypto. So there will be a lot of more money flowing into crypto because of this industry. And this is good for everyone. It's good for the fashion companies, and it's good for you and I who are cryptocurrency users, and as well, it's good for the crypto industry. One good example is that in December, Balenciaga announced the formation of an in-house metaverse unit. They still haven't really let out details on what they plan to do with their metaverse business unit. However, Balenciaga CEO Cedric Charbit said that he sees the metaverse as a country, which is a market just as important as any nation the brand currently operates in. So it's obvious that they see metaverse as extremely important. They'll have probably a pop-up store in the metaverse. They'll invest a lot of resources in making sure that Balenciaga is present in the metaverse in the correct ways. And this is important because now they're trending into new territory that not a lot of companies have gotten into. And it's very interesting to see how this will pan out. Seeing what Cedric Charbit, their CEO, is saying, and with the confidence that they're saying, gives us hope that this is something that they have researched and they believe that will be successful and grow with time. The Federal Reserve Bank in the United States finds that unbanked Americans are turning to crypto at a higher rate. So people who transact with cryptocurrencies were twice as likely to be unbanked as people who don't use them at all. The Fed found that 13% of Americans using crypto for payments do not have a bank account, up from the 6% among people who don't use crypto at all. So 6% of people who don't use crypto are unbanked. 13% of those who do use crypto are unbanked, meaning that more than twice of those are using crypto. Also, 27% of people using crypto for payments report that they don't have a credit card, up from 17% of people who don't hold or use crypto. So it is quite obvious that people who are unbanked will turn to crypto as an alternative payment method. Opening a bank account in the United States, as I've been told, is a lengthy and expensive procedure. So a lot of people in the US is unbanked, which for me is quite baffling. And these people, they don't really have a way to connect to the economy or to the financial system if it's not for payment platforms such as Venmo and PayPal and Cash App. However, those aren't very conducive specifically for business, and they attract fees as well. So they will turn to crypto, which with a simple mobile phone, they can have a wallet. And if they sign up for a crypto exchange, they can buy cryptocurrency. Not only that, the transactions are extremely quick and most of them are almost free. So it comes to a point where people who don't have a bank account, they turn to crypto for the reasons that I stated before. This study also remarked that people who use crypto assets like Bitcoin and Ethereum as investments tend to be wealthy. They are disproportionately high income, almost always had a traditional banking relationship, and typically had other retirement savings. So what this means is basically that most people who hold Bitcoin and Ethereum and other cryptos for investment are already wealthy and already have bank accounts. Those who hold crypto in order to transact day to day don't have a bank account and are typically lower to middle income. And this is a big market that cryptocurrency can proliferate in. Because if you don't have access to a banking system and to the financial services system, however, you have easy access to cryptocurrency, which offers a fantastic alternative, then you'll take it. It's the same thing as what happens in Africa or in sub-Saharan Africa. Most of the population is unbanked. And a lot of people are turning to crypto because it's easy to set up, it's easy to buy crypto, and the transaction times are quick and the fees are very minimal, almost negligible. So a lot of people that are engaged in the informal sector in sub-Saharan Africa are now turning to crypto to transact and to buy goods and services and to sell these goods and services, because it allows them to connect to the financial system without actually having a bank account or incurring high costs. And this gives them countless opportunities for expansion, to obtain credit, and to have a wider range of goods and services, and as well as customers, those who use crypto. Crypto funds shrank to lowest since summer of 2021. They fell to the lowest since July 2021 because of the recent price crash in cryptocurrencies and equity markets. So CoinShares reported the value of assets under management held by digital asset funds dropping to $38 billion as investors pulled out some almost $150 million during the week of May 20. And confidence in crypto has been flailing, given both retail and institutional investors that got into crypto over the past year are in the red. So if you got into crypto in the past year, the prices were sky high, and now they're almost half of that. So you are deep in the red, and obviously if you are making so many losses, it will make you lose confidence. And this is why the confidence has been flailing and people have been fearful, selling off, and that's why there has been a lot of outflows. Also, that investors diversify from Bitcoin. They see that Bitcoin isn't a one-stop solution, so they are now realizing that with this crash, let me diversify. So Bitcoin focused funds suffered the lion's share of the outflows with $154 million in outflows last week, shedding about the half of the almost 300 million inflows netted during the previous week. However, there is a positive side to this, like with everything. Multi-asset funds, which are funds that hold multiple cryptocurrencies, stacked up almost $10 million in inflows last week. These type of funds might be winners from the volatility in crypto markets as investors look to diversify their holdings, with almost $200 million in inflows since the start of the year. It is believed that investors see multi-asset investment products as safer relative to single-line investment products during volatile periods, which is something that makes sense because in times of crisis, people want to diversify in order to minimize their losses, and these multi-asset funds tend to fall into various categories of crypto. Bitcoin being sort of like a store of value, Ethereum as a smart contract platform, and you have others which are meme coins, you have DeFi platforms, you have multiverse platforms, Web3 platforms. So all of these combine to make multi-asset funds. And although when Bitcoin goes down, the whole market goes down, some of the coins go down less than others, or some even go up against the market because of company-specific factors and decoupling of the market from Bitcoin. So when this is the case, multi-asset funds become attractive because they offer diversification in crypto itself, and the losses are minimized and people can feel safer doing so. And this is why diversification is extremely important. If someone wants to stay all in crypto, very well, it's their choice. But it's always good to diversify and place funds in different baskets so that if one suffers, at least they have others as backup. And that's all for today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with family and friends. Invest wisely, and cheers.